And this is Real Estate Underground.
Greetings and salutations, Real Estate Undergrounders. Thank you so much for being here today. Yet another really cool episode. Turns out that I kind of knew because of Twitter and LinkedIn and Yona Weiss, and we shared a lot of the same online friends, but somehow you and I had never met. But so today's episode is really about proof, fact that it does not take a rocket scientist to actually be in this business. Well, sort of. Gentleman that we're meeting with today, Flint Jamison, is a real life rocket scientist who thankfully is taking the plunge and is now a full-time capital raiser. So Flint Jamison from Vestus Capital, thank you so much for joining us today. It's good to see you.
Yeah, thanks for having me on. And yeah, not rocket scientists, but I have
Aerospace,
designed wings on aircraft. So I don't know.
You have built more aircraft than I have. How about that?
Yeah, probably.
All right. So welcome to the show, man. How you doing?
Yeah, I'm doing great. I mean, the
Good.
economy is doing funny things for us, but you know what?
It's a little weird.
As long as you keep going, there's still opportunities no matter what. So life is
Without
good.
a doubt. Yeah, I mean, there's a couple of projects I want to talk about, but I mean, one of the reasons I was so excited to talk with you was, you've had quite a bit of experience across, multiple asset classes, and you've kind of evolved over time. And I know that you've done syndication. I know that you and our mutual friend Tony Torres and have gotten into the build to rent world, and I know that you're raising capital. So for those folks that don't stalk you on LinkedIn like I do, why don't you tell them who you are and what your background is?
Yeah. So my background is, as you alluded to, it is aerospace. I worked for Boeing for almost 10 years, designed the wing on 787 or parts of the wing. Then I got an MBA. I did some program management, modifying aircraft for the Air Force, which is cool. We took normal commercial or biz jets and turned them into Air Force assets, which is cool. But yeah, it was all part of the rat race, and I decided, I was tired of the stock market. So in 2018, I bought a duplex. I bird it, buy, rehab, rent, refinance, repeat.
Yep.
It was okay. It wasn't a successful burr, but it was successful enough that I didn't lose money. But I realized after that, I would need to do 50 more of those before I could just retire on real estate. And I realized the amount of capital and effort. And it's like when you're in residential, as a flipper, even if you just buy a single family home, it's like buying yourself a job. You're buying yourself a part-time job. Or if you're a flipper, it's a full-time job.
It's a full-time job. There's no denying it.
And I was like, well, I mean, if I have to do this 50 more times, I don't know how long that's going to take me, all the capital. Right. And so I fell into syndications because of a podcast I heard. And since that podcast, I was hooked. I dove deeper and deeper, started getting educated and started finding partners. And then I was in. And in 2021, I had my very first deal was a 23 unit in Aurora, Colorado.
Congrats.
Just outside of Denver. Well, that one, I got my first failure out of the way. Let's just put it that way. I lost earnest money. We didn't. Yeah. No investors were hurt in that deal. We had to back out, but our earnest money went hard, so I lost a lot of money.
Yeah.
And then I was like, well, I learned a lot of things there. I didn't have to pay for a mentorship program. I got full up mentorship on that thing, and it costs the same, which is the funny part.
Pretty much, right?
Yeah, my earnest money costs the same as a mentorship. So I doubled down and got some more coaching, figured out where my weak spots were. And then I found experienced partners to jump on board with. And it was just serendipity that I ended up becoming a capital raiser versus an operator, which I would have been on that project. It allowed me to be remote. It allows me to not have to travel a lot, like acquisitions people travel a lot. So
yeah.
Long story short, I became a capital raiser partnering with experienced operators. So now the fun part is I get the experienced operators in their niche. That's who you want, is the person that does the Class B assets in Dallas Fort Worth. And that's all they do because they know it best. But then you're not diversified if that's the only person you know. So then I go around, I can do self-storage, I can do Augusta, Georgia. So it worked out really well for me. And now I'm in build to rent.
And so, yeah, and it's got one of the things that I've, kind of learned about you is that, you've got a wife and a couple of little kids. And, that's actually what spurred me to leave corporate America as well. As, my wife, Patricia, turned to me one day. She's like, man, you're just missing so much good stuff. And I was all over the world, traveling for, software companies. I'm a technology geek, not an engineer, but a self-professed geek. And so I mean, thank God for real estate, because it basically rescued me from, missing out on choral concerts and swim meets and dance recitals and softball games and all the other stuff, and just not having to reintroduce myself to my children every Friday night, because I'd been gone since last Sunday. Right.
Yeah. I saw a quote yesterday on social media that really hit hard. It was, in 20 years from now, no one's going to care that you work so many hours, but your kids, they remember.
Without a doubt.
Like, it flashback to, I remember my dad coming home at 7:30 o'clock every night.
Yep. Dog tired. Yeah.
Yeah. So I have a 4 and 6-year-old, and now I work from home. I'm working for myself. I can be there on sick days. I'm home. I'm just here with them. It's great.
It's amazing. And you don't miss a thing, right? I mean, we're recording this in May, and it's peak softball season. And the second you and I are done, I'm getting in a car to go watch my youngest go play softball. So, and it's 3 o'clock here on the East Coast. So it's, I mean, and the best part about it is I don't have a boss to say, hey, I'm checking out early, I got to go. Right.
Yeah.
That's a good thing. So, you are an aerospace engineer. So clearly you have an MBA. So clearly you are really smart. So you probably could have invested in franchises or ATM networks or, anything else.
Still might.
Yeah, you never know, right? Day's not over. But I'm just curious, what was the draw to real estate in specifics, as far as an asset class?
Yeah, so originally, before I got into real estate, I was trying to crack the code on stock market. You can listen to podcasts just like real estate.
Yeah.
But I was just like, I just don't get it, because the stock market is so volatile. You get someone who sneezes and the stock market drops. You get most recent example is Elon bought Twitter. He bought Twitter, right?
Yep.
It's funny that I forget about that. Anyway, so you got Tesla, and he goes off and buys Twitter, and Tesla stock drops. Like, in commercial real estate and in businesses that aren't publicly traded, their valuation is truly based on the revenue or the net operating income.
Right.
Just like commercial real estate, on their value that they create, not their perceived whatever. Elon buying Twitter all of a sudden kills the valuation of Tesla. It just makes no sense. So, I got to get out of that. And then you always hear about, oh yeah, my rich uncle, all he owns is real estate, and he doesn't work a day in his life. And I was like, that sounds good. Let's try that. Yeah. And that's kind of what got me down this rabbit hole.
Okay, cool. And so let's talk about your focus. What was the impetus to move from multifamily syndications to build to rent? Like what piqued your interest there?
So I like to be opportunistic when it comes to things that make great sense.
Yep.
Back to what I was saying, you always want to invest with the person that's an expert in their niche.
Right.
But there's a lot of experts in a lot of asset classes that make a lot of sense. Yep. And build to rent is, as a new development product that's being created, is getting a lot of attention from institutions, like hundreds of billions of dollars of interest, but they don't build. So we go out and we'll build, and they'll buy it from us once we're done. So we're essentially building a commercial property that looks and smells a lot like a single family housing community with a nice pool, and it comes with a clubhouse and all that. And it's managed as a multifamily property, but the tenants live in their own single family house.
Right. So they get the best of both worlds. I think you were saying on a Yona Weiss's podcast, I was listening to that. And admittedly, I was listening to Yona, and you happened to be the guest. But
right on.
And I was like, hey, I'm talking with him in a few weeks. That's cool. But the thing is that it's the huge advantages, and because of the millennials and their view on ownership, and the economic reality that it's cheaper to rent than it is to buy these days, which is nuts.
Absolutely.
But that it's presenting a huge opportunity, and I've learned from Tony Torres that not only can you create these, and if you want to manage it for a few years and ride the cash flow wave, that's wonderful. And then there are so many different exit strategies that you can utilize to then offload and go take the next hill. So why don't we talk about that a little bit?
Yeah. So I mean, in any syndication, we always assume multiple exit strategies because we're assuming a sale in 5 years, and no one has a crystal ball of what the economy's doing. I mean, look where we're at now.
Yeah.
And you always got to have that plan for multiple exit strategies. And some of those could be, well, we're just going to sit on it for a couple more years and wait for it to sell.
Yeah.
With build to rent, we have a little bit more options than you do with an apartment building, because an apartment building, you sell it as a single piece.
Right.
The goal for us in build to rent is to sell it as a single commercial property. If we have to, maybe we sell it off to, I'd say the first step is sell off the homes individually, but maybe in tranches. So like, hey, there's a single family investor who can buy 5, and we sell them off in chunks or in tranches.
Yep.
And then I say, then you take a step further beyond that. Well, if that's not the case, then we can just partner with a broker in town, and they can sell off each of the houses to owners, and we'll establish a HOA community because all the amenities are there, and there's still a clubhouse.
Sure.
So it would still be a really great community, and we're building nicer furnished houses with the nice hard surfaces, granite countertops, stainless appliances. So no matter what, we can sell this property. It's just depends on what the economy is going to drive us to.
Yeah. And obviously there's the institutional play, right? That you were talking about earlier.
Yep.
Which is a beautiful thing.
Yeah. That's option number 1. Sell it to the institution.
Clearly. So in terms of the investment itself, when you are, let's say I'm an accredited investor and I'm looking to invest in your project, how quickly are you selling? Is it as soon as you're done and all the units have been absorbed and stabilized, or is there a hold period or?
Yeah. So the business plan, we go in conservative as always. On this, let's just say for our Foley, Alabama asset, it's 160 homes. We plan to be built in year 3, and then we'll ride it stabilized till year 4 and then sell. So we'll cash flow a bit there. What we've seen most recently is what a lot of the institutions are actually coming in and buying you out early. I have a friend that had a massive 600 unit. I'll tell you a couple of the spans here. It's a 600 unit built to rent. They spent 18 months with entitlements and engineering. We're about ready to cut dirt. They got 2 unsolicited offers. They had to take it, even though they were bummed. They put all that effort in, didn't cut dirt, but they doubled their investor money in 18 months because the institutions came in unsolicited and said, we want this. And so then they contracted somebody else to build it, but they wanted to own it. We are fully expecting to be given offers. I mean, we could be 50% built and given an offer that we can't refuse, or we write it out per the business plan, or we take the business plan further to where we cash out refi because the property is so valuable and cash flow positive that we just want to sit on it for infinite returns. So we could just cash out refi and say, here's your original investment back. Let's just ride this cash cow.
So how does a bank, I assume it's agency debt. So how does Freddie Mac or Fannie Mae or how do they view the property? Do they view it like a multifamily or something else?
Yep, they view it as commercial.
Okay.
Yeah. Yep. And even then, in the build phase, we're going for like an Arbor construction loan. It's a commercial construction loan.
Got it. It's fascinating. And
I'll take that one step further if you want to hear this. So
please,
what I've heard is, so these financial institutions we talk about that are buying things out. I mean, you have the big banks you hear of, and then you also have like Blackstone and BlackRock. But what I heard, so Arbor, I just mentioned as a construction loan. What I've heard is Blackstone or BlackRock is actually investing in Arbor. Here's a chunk of money. Go put this into build to rent. and then they'll come back around on the back end and buy it. So they're kind of infusing cash in the early stage and picking it up on the back end, with Arbor being the middleman lender.
Coming and going. Brilliant.
Yeah.
Yeah. So, ultimately they get the return for one fund, and then they use a separate fund to buy it and then ride that cash flow. That's three-dimensional chess kind of stuff. That's pretty cool. Interesting. And so, in terms of operating the business, or the property itself, we'll use Foley, for instance. Obviously there's no HOA in place, right? There's the management team, and that's how you're managing it. How difficult, like, say for instance, if you decide, okay, we're going to sell these off to the folks that live there, right? How, what is the process to converting that to a, homeowners association? Because obviously there's a VIG on the, every month that you're paying.
That's a great question that I don't have an answer to.
Yeah. I mean,
I haven't been full cycle, nor has that played out in my world.
Yeah. Well, yeah, that's a good thing though, because that means the institutional guys are coming in and doing their thing, right?
Yeah.
I mean, I would imagine it's part of the purchase and sale is that you're establishing that. But I was always wondering about that.
It would, I mean, there would have to be some plan to phase people out as their leases go, and you establishing. Yeah. And I'm assuming the established property manager would have to maybe play two roles there as an HOA as things slowly transition and people. Yeah. So I don't know.
Yeah. Good question. I think we kind of figured it out. There's a couple hundred IQ points on this call. So, I'm sure we were close. So, and by the way, it's heavily weighted on your end, but that's okay. So, in terms of your operation, a capital raise, tell me about that. Tell me about your, the systems you have in place, and, because I'm a technology guy, right? So I think in terms of process, procedures, technology enabling, and, checklists, right?
This is, we could talk for hours. So as an engineer who's designed airplanes, has no prior experience or knowledge in marketing and sales, and that's what capital raising is.
Right.
On top of it's a relationship, human to human thing. But social media is kind of my number one marketing strategy. I have active campaign behind the scenes for my CRM. The website, obviously, it's kind of a funnel.
Yep.
And then from there, from investors investing in properties, use Syndication Pro as our portal.
Okay. All right. Offline, I want to talk to you about that, because we have a different tool, and I want to ask you some questions about what you liked about it, but I won't put you on the spot.
Yeah.
So, and in terms of your team, right? I mean, capital raisers, I have a good friend of mine, Margaret Kozlark, she's a capital raiser. Actually, you may know her.
She's another partner. I was actually talking to her.
Now that I think about it, this world is small. The cool part about being a capital raiser is you don't need the expansive team that, an operator like me needs, right? I mean, I've got people to do everything. And when I don't, I'm the guy that's doing it. So, but, I'm curious, what, from a sales and marketing perspective, you have an MBA, but, not necessarily your wheelhouse. So, how do you address that? Like, what do you run everything, or do you have a team?
As of this month, I now have a team of VAs. I have two VAs that are doing content. They're helping me with content. Right. Before that, I was 100% me, and it just became too whelming.
It's a lot.
It's far too much. Yeah. And I continue to think about all the things that I should just be offloading to another VA and more VAs.
Yeah.
But yes, you're right. We rely heavily on the primary operators to cover all the other bases, the acquisition, the asset management. I jump in and infuse help. Like with the BTR, I'm actually doing marketing and sales and website updates for them. Because for those who don't know, as in the SEC world we're playing in, we cannot just be a capital raiser. We have to provide some sort of substantive
you got to have a role.
Work. Yeah, another role.
Got to earn your keep.
I've done, exactly. I've done asset management. I've done now marketing and sales and website updates, which is, if you would have asked me 4 years ago, Flint, you're going to be a marketing and sales and a website guy, I'd be like, no way.
You are out of your mind. Right? Yeah. It's it's just like me being a general contractor. I have the scars on my back from learning how to do that. I was a sales and marketing geek, right? So what do I know about building anything? And,
Yeah, yeah.
and that was, 13 years ago. And I broke everything and made tons of mistakes and tried really hard not to make the mistakes twice. And sometimes I actually did. And, you learn, right? You just,
Yeah.
yeah. I mean, it's like, one of the things I was on Twitter the other day, and somebody had posed, what would you rather do? Would you rather go back to being 5 years old and start over, knowing what you know today? And I'm 53, so that's a whole lot of living, right? And or we'll give you $1 million today. And I'm like, oh, I'd 100% go back, because now I know what I need to know.
Yeah.
And by the way, I'd put, 10K in Amazon and 10K in Apple in 1997 and let it ride. But and I'd start buying multifamily as fast as humanly possible. But it's amazing, you don't realize it until you kind of take an inventory that, you studied to get an MBA, and I think you're living it as we speak. I got mine by, I don't have an MBA, but it's fine, because I had to learn how to do all this stuff, because you get a team on the ground, and they're like, okay, this has, and I'm like, all right, this has to be done. Who knows how to do it? Okay, nobody knows how to do it. All right, I guess I'm going to do it. And you do your best to kind of figure it out.
Yeah, to be honest, the School of Hard Knocks is the best educator.
I wholeheartedly agree with that. And because, you start to build your way too, right? There's a voice there, especially in the sales and particularly the marketing world, that the only way you can create that voice, that value system, that perspective, is by trying stuff, getting clunked on the head, trying more stuff, people, ticking people off, trying more stuff. Oh, that resonates. Okay, cool. We're on the right page now, right?
Yeah.
And so it's interesting. So yeah, go ahead.
I was just gonna say, I mean, the MBA in corporate world, it got me to where I got to.
Sure.
But well, full disclosure, I think everything I did up into life got me to what I'm capable of doing right now.
100%.
But looking back, like, man, I could have gotten into real estate without that MBA. I could have done so much earlier in life had I known to take this step earlier. Like, I could be in once again, would I go back? Yes. Because
heck yeah, you bet.
Even if I went back 2 years ago, I would have taken action steps sooner, because I was too afraid just trying to learn everything when I didn't need to learn everything. I've got a team in place. There's operators, there's people that are covering my weaknesses.
Right.
So just take the action. Here's advice for your audience. Take action. Stop trying to know everything. Take action sooner.
Because it's not knowable. So
yes,
let go. And I'm a big fan of figuring out your highest and best use. So if you're the web guy, then that's that's what you do to add value to the operation, whether it's yours as a operator or yours as a capital raiser, and you're filling a role within the GP. You got to figure out where can you add the most value, right? And doing everything is not adding the most value, because I found that over the course of time, I had my hand in several different businesses, and I realized not that long ago, actually, it was less than a year ago, that I was doing everything at about 80% capacity, and at 80% I suck at most things. So in order to be great at something, you gotta focus. So I hear you on that, and also be self-aware to know what you're great at and what your gaps, which is huge.
And that could be some of the hardest part. And how do you backfill those gaps? Because sometimes it gets hard to delegation is one of the hardest things I learned in my career, is finding and trusting somebody else to do something you think that you're better at, when in most cases you're not.
Yep. And even if you are, it's okay that they do it at 90%, because that allowed you, then worst case, you're the editor, right? And that takes a fraction of the time. Best case, you learn to live with it and be like, okay, 90% is actually still pretty damn good. So we're going to move forward, right? The other thing I think value, from an education perspective, I think, undergrad, graduate schools, business schools, they teach you how to think and problem solve, right? No one taught you, I assume, no one taught you how to how to run a website when you were in college, right?
No,
Right.
no.
But what they did say is, okay, it's how to break down, who is the audience? How do I want to communicate with that audience? What do they need? And start to figure out what problem you're trying to solve, right? It turns out this problem you're trying to solve is keeping people, helping people get off the stock market roller coaster and make a predictable income, over the course of a long period of time, which is a beautiful thing.
Yeah, absolutely.
Yeah. So in terms of, you and I have had similar mentors. We were kind of going back and forth that we're both Michael Blanc devotees, and I've had other mentors, Charlie Dobbins and others, and I'm sure you have as well.
Yep, absolutely.
I'm curious, and it was Charlie that said, if you think you're in the real estate business, you're wrong. You are in the marketing business. So it's actually, I was really fired up when you said that. So in terms of advice, the mentors that you've had over the years, I'm curious, what was the best advice you ever got, and who gave it to you?
Oh gosh, there's such a long list.
No one's listening. It's okay.
Let me start off with, I think my best advice is to, you don't have to go find a expensive mentor to learn syndication 101.
True.
What you should do is learn where you want to focus your expertise and go find a mentor that's dedicated on that expertise. So to give you an example, I went and found capital raising coach. Mm-hmm. I spent a year with them. Then I realized it wasn't deep enough. They got all my systems in place. It was great. But then I needed something more. I'm an engineer. My sales tactics suck. Now I have a sales coach. And that is by far probably one of the most powerful things that I've done is hired those very particular coaches.
Yep.
However, to answer your question, this was just last week, I think. So we all have that voice in our head, we're struggling. You're not good enough. You don't have what it takes.
Right.
It's just a constant battle. And if you have that battle, it's okay. You're human.
Yep.
But we have to figure out how to battle it. And she wrote me a note over chat on Zoom that I had to hang up on my wall, and I'll read it for you. It says, "You never go small. You always go big. That is your gift. And you have done tons of big things. You will do this. Grab on your accomplishments and let that give you some peace."
Oh my God, I love that.
And she just because I was having this was part of a mastermind group where we're talking about our challenges, and she just slapped that in the chat. And I'm like, I cannot believe you just gave me that. This is cool. So I printed it out.
That's unbelievably profound and spot on accurate, right?
Yeah.
Yeah, that's amazing. So who gave that to you? Can you disclose the name?
I can. Her name is Teshra Robles. She's up in, I think it's Coeur d'Alene, Idaho. She's not real estate. So I have two coaches right now. I have a sales coach and I have a high performance coach, which is more mindset, figure your life out.
Right.
Beyond just business. And she's part of that group. And she is actually now a business consultant for small businesses in her area. But I mean, every time we talk, she's always throwing nuggets at me that I absolutely love.
That's very cool. All right. So, one of the things that I've noted about a lot of the folks that we have on the show and in past lives, the executives that I worked with and for, leaders tend to be readers, right? And so I'm curious about, first off, how do you take in information, whether it be audiobooks or, physical books or podcasts or YouTube videos or whatever. And, and I'm also curious, because I want to add to my reading list, who are you paying attention to these days?
Oh gosh, my reading list is so long. So I got into this by listening to podcasts, as I was saying, and I was walking my dog every night after the kids went to bed, and I would digest podcasts. It started out with Bigger Pockets.
Yep.
Then it ended up Michael Blanc. And then after a while, I OD'd on podcasts, right?
Right.
And,
is that possible?
I don't know, but I was like, I got to stop with podcasts and go to books. And then the number of book recommendations in our world is just
voluminous.
stupid. Yeah. And I've got a whole list on my whiteboard here. But right now I'm listening to Infinite the Infinite Game
Is that the
by Simon Sinek.
oh yeah, okay. I have
So
not
it's
read that.
Oh gosh, I mean, I'm in chapter 3 and I'm like, this is pure gold.
Yeah.
I think one of my favorites is The Go Giver.
Yeah.
It's not the fun part about that book is it's a mindset, but it's based around just some fictional story to help you think differently. I thought it was just a phenomenal book on how to think through life. But yeah, I mean, I've heard 0 to 1. Peter Thiel is something that, from a business perspective, I haven't read that one yet.
Yeah. I recommend Shoe Dog as well. That'll change.
Oh, I do have that.
you.
Yes.
Yeah, that's outstanding.
That's the Nike one, right?
That is. It's Phil Knight. Yeah.
Yeah. Okay. That is actually downloaded on my phone, but
Yeah.
not listened
Cool.
to yet.
All right. Well, it's on the list, right?
Yeah.
Yeah. Awesome. So, so as far as, when you look back on, and we kind of touched on it, but I want to unpack it a little bit. If you had to do it over, okay, I'm going to wave a magic wand and I'm going to let you go back and be 5 years old again. What would you do differently in terms of kind of where you are in your journey?
Gosh, I think the whole aerospace career I had was a pursuit of passion. I love airplanes. And I think to a certain extent, when you're in that world and you're fighting the day-to-day grind, it doesn't feel like a passion anymore. It's just,
right.
Like, I'm just working a ton of hours on this tiny little corner of the project.
Yeah.
I think around the MBA days, I got my MBA thinking I was going to go do a startup company and be an entrepreneur, but I never really found out what I wanted to do. So I ended up going and working at a small business and helped another friend with his business. And then I ended up becoming a program manager at a bigger company. So I think dialing back then, where I was getting my MBA, if I had known about this real estate thing and solopreneurship, that would probably be the path I would take, because I think my growth between the MBA actually in 2014 and the next 6-7 years of corporate, my personal growth wasn't that much. I was just doing the same thing. And here I'm in a totally different financial world. I'm closer with my family. I'm a lot happier. I'm a lot less stressed. It's just a totally different life perspective than the standard go get a job,
right,
and work all day.
And work for 50 years and die.
For 50 years. Yeah.
Yeah, I hear you. All right. So, hey, Flint, I've really enjoyed this conversation, and I'm again grateful for your time and your insights. So let me ask you, when you are not talking about real estate, what else do you like to do?
I'm in Colorado. I love to ski. I love to mountain bike. I'm a outdoors. Yeah. Love to go backpacking into high alpine lakes and fish. So it's great. Actually, last year, this was kind of fun. I hiked to the most remote campsite in Rocky Mountain National Park.
Really?
And it's actually off trail, which is, you normally don't hear about that being like an allowed thing. It's a truly designated campsite with no trail to it. So you have to bushwhack. It was epic because not too many people get that far back in the park, and those fish were biting all day long.
So you're a flyer fisherman, or?
Yeah, we were fly fishing. I do both. But I'm not a good flyer fisherman, but I go with people who are really good, and they hand me really good equipment and just say, "Here, Flint," and then I catch fish. So
yeah, there you go. Well, there's a reason why they call it fishing and not catching, right?
Yeah.
It really has nothing to do with the fish.
Right. Yeah. That time we were catching all day, every day.
That's awesome. So, Flint, if somebody wants to learn more about you or Vestus Capital or anything else you have going on, what's the best way to reach you? And
there's two things. One, my company is Vestus Capital. If you can't remember vestuscapital.com, you can just type in investwithflint.com and it'll take you right there. If you want to engage with me, see my content, LinkedIn is great. So it's just /Flint Jamison.
Okay. Awesome. So Flint, thank you so much for your time today. Good to see you, my friend. And
Yeah.
I'm pretty sure we're going to be on a Zoom call pretty soon because, like I said, I just talked to both your partners and didn't realize you were part of that whole thing.
Nice.
Like
All right.
a week ago about a project we have going on. So very cool.
Perfect.
So welcome and thank you and good to see you.
Yeah. Thanks for having me.